Morning, it's Dan Barnholden, CEO of Luca Mining. Luca Mining is a Mexican-focused mining company with two operating mines, one in Guerrero, one in northwest Durango. We are in the process of ramping up these two mines, and I expect, if all goes right, we will be in a position to produce in excess of 100,000 ounces gold equivalent in 2025.
Dan, good to see you. We met up in Beaver Creek in Colorado recently in September. Just for people new to the story, let's give them a quick reminder of what you walked into and what your brief is.
Sure. So I spent the 20 years from 2004 to 2024 as a mining-focused investment banker, working both in boutique investment banks as well as bank-owned dealers. I have financed literally hundreds of companies like Luca, and I saw the opportunity to get involved with this particular story. I see all the ingredients of a successful emerging mining company, and I was offered the role of CEO, and I thought maybe time for a career change, and I see an extraordinary opportunity to build real value here. I've invested $1 million of my own money into the company, and I continue to be a buyer of the stock because I think here today it's extraordinarily undervalued. So I'm thrilled to be involved in the last 5 months, and indeed since the last time we sat down 3 months ago, we've made extraordinary progress, and so I'm really pleased to be back with you.
Fantastic. Look, we've got two projects we can talk about today: Campo Morado and also Tahuehueto, obviously, to implement the sorts of changes and targets that you've probably set yourself. You're going to need, I guess, a change of team, additions to the team. And I saw the release that you put out recently. You're starting to do that, not just at management level, but operationally as well. Who do we need to know about, and why have you brought them in?
Okay, well, so Matthew, last time we sat down, we were working on a financing. In the end, we closed on $11.5 million. And really, one of the stories about Luca was that it was chronically underfunded. So the company had not been able to meet its goals consistently, and the company had not been able to invest in exploration. And as you know, exploration is really the lifeblood of mining companies. And so one of the major opportunities that we see after having raised that money and improved in a very meaningful way our financial position, we went out and we announced last week that we had hired an all-new, I think they're a world-class exploration team. And that team is going to be led by Paul Gray. Paul Gray was most recently at Victoria Gold, where he found literally millions of ounces of gold. We also are joined by Jillian Carville. And Jillian, I believe, is the world's foremost expert in the Guerrero gold belt. She was personally leading the team that discovered Ana Paula, which now sits in my friend Charles Funk's company called Heliostar. She was also involved with the discovery when she was working with Teck of Morelos, which is now, I believe, the largest gold mine in Mexico, currently operated by Torex. And then she was also, in her time at Teck, involved with the discovery of San Nicolas. So an extraordinarily accomplished Mexican geologist. So she's going to be working with us half-time. And then also Fernando Teliz, who's a Mexican national, joins us from Corp Mining. And he's thrilled to be back working in Mexico. So those three individuals working for a company with $100 million Canadian market cap, I think that we are really setting ourselves up to change the narrative of this company and of this story to be one of massive resource growth potential. And really, that's in my personal opinion, that's going to be where a lot of the share price appreciation comes from. When that team is successful in its mandate of resource growth.
Right, okay. I think lucky for you, you've kind of got a two-pronged attack here. It's kind of clear to us that the companies that are getting a reward in the market are the producers. They're producing cash. People like that. It gives them options as to how they go about doing things. And they're not cash constrained. They're not doing dilutive financings on the whole. Lots of M&A, etc. And that money hasn't yet cascaded down to developers and certainly not down to explorers. So for you, the primary focus, it seems to us looking in, is you got to deal with this kind of ramp up at Campo Morado, and you kind of the commissioning and production at Tahuehueto is going to be key here. Can you again give us a summary of where you're at with both of those projects and what your plans are for them for 2025?
You asked a lot there, and so I'll break that up. When we last sat down, I talked about this optimization effort at both mines. As you hit on, we have two operating mines, Campo Morado. At Campo Morado, the story is really one of foregone maintenance. Okay, it was acquired by a group called Nearstar in 2011, and really, over the course of the last 13 years, it's been kind of a story that's been up and down, operating, not operating. But the one key thing is that it wasn't well maintained, and so over the course of the last 2 or 3 years, we've invested in the mill, and we've also brought in a mining contractor to enable us to push tons out of the mine. So one of the big mandates for the mining contractor is to be able to fill the mill consistently. The mill is able to process 2,400 tons per day of ore. First half of this year, we were struggling to do 1,400 to 1,600 tons per day. So the big piece of improvement that we have is a mining contractor that is able to fill the mill. By the end of the year, the mining contractor will be consistently delivering 2,000 tons per day. And then over the course of Q1, ramping to 2,400 tons per day. In addition, we're working with Ausenco, of course, being the global mining consultant, and they are making some major improvements to the mill. And so those two initiatives well underway, and as those get completed, we are going to be able to push a consistent production cash flow narrative at Campo Morado. And this is happening right before my eyes. It's day by day, this mine is a little bit better. And so Q3, we released our Q3 numbers yesterday. Campo Morado, it was a transitional quarter at Campo Morado last quarter, and that was because we moved from owner-operator to mining contractor. Now that mining contractor is fully mobilized, they are off and away to getting to that 2,000 ton per day target and beyond. Over at Tahuehueto, it's a similar story, except this is a brand new mine. And really the story is one of capital constraints. So we relieved those capital constraints with the capital that we raised in September. And really we've been able to make the requisite investments. They weren't huge investments, $1 to $2 million, just to complete construction. That construction is complete now. And we are consistently filling the mill at a rate of about 800 tons per day. Nameplate capacity is 1,000 tons per day. And over the course of the upcoming weeks, we're going to get to 1,000 tons per day consistently and declare commercial production and have a fully commissioned operating mine at Tahuehueto. So very exciting moment over the course of the next several weeks at Luca Mining.
Right. You're the money guy. You brought in a whole chunk of money, just over $11 million recently. You're going to have to work out the allocation of that capital, right? So obviously, it kind of makes sense to focus on what's going to return the most. The return on capital invested is going to be a big part of how you think about this. So can you talk about the quantum? What precisely are you doing? Is it sort of organic, incremental change, or is there some sort of dramatic effect that it's going to have if you get it right in 2025?
Well, we as you said, we raised $11.5 million, so call it $8 million US. 2 to 3 of that was earmarked for the mill at Campo Morado, and the improvements that we're making at the mill will be better than incremental. They will be a step change in recoveries. We're going to be moving to a 3 concentrate recovery system, whereby we recover a zinc concentrate, a copper concentrate, and a lead concentrate, where the precious metals also report to the lead. What that means is we're going to be recovering more of the metal from the ore, and we're going to be paid for more of the metal because they are separate. Therefore, they're more valuable concentrates. Trafigura, our off-taker, will pay us more for each ton of concentrate that we deliver to them. That's going to be a step change in cash flow, because we're going to be doing the same amount of work, but delivering more and better concentrates to our off-taker. So that is major for us. That's a $2 to $3 million investment. Over at Tahuehueto, similar story. we were capital constrained. We had a number of down days, as you would have seen in our financials. The reason for that was we didn't have spare parts. We didn't have redundancy in the operation. We've invested $2 to $3 million at Tahuehueto. A lot of what that money has gone into is building redundancy, building operational resiliency at Tahuehueto, so that if a part breaks, rather than having to be shut down for a few days, we've got spare parts on site. So that money has gone into buying spare parts, building a spare parts warehouse, making sure, again, that we have that operational resiliency at Tahuehueto, because it is quite a remote mine. It's 10 hours drive from the nearest big population center. So that means that in the past, when we've had breakdowns, it's been days, if not weeks. Now we've got, as an example, we've got 2 backup pumps on site, so that that as these it's mining, so these things happen all the time. But it's hours or days, not weeks or months of downtime.
So interesting. It kind of used to be very much sort of inventory based, then it moved to just-in-time strategies. But during COVID, obviously that changed a lot. For you, with remote assets, it must be particularly painful, as you say. Those wait times cost you a lot of money every day.
Well, as you know, the single most important thing is to continue to fill the mill. That's why you build a stockpile. And so if there's something that happens that either prevents you from mining or prevents you from milling, and particularly if it's multiple days at a time, so the more consistency you can build into your operations, obviously the more consistent your cash flow is going to be, and of course the more of it there's going to be. Fewer down days, more cash flow to your bottom line, obviously.
Interesting. Okay, so you're looking at all the things you can control. Some of the things you can't control, in a nice way, gold price and silver price. As a producer, taking full advantage of that at the moment.
Those definitely acting as a tailwind, and don't forget the zinc price. Everybody focuses on copper. Copper is the big sexy metal. Everybody wants to be involved in the copper space. However, zinc has outperformed copper year to date by more than 10%. And of course, copper is the primary metal that we have at Campo Morado, and copper makes up 25 to 30% of our overall revenues. So, zinc makes up 25 to 30% of our overall revenues. So, obviously the gold price, a real tailwind for us, but so is the zinc price.
Yeah, for sure. Very interesting. Look, I don't want to kind of dig into the it's interesting to sort of see what you're doing in terms of ramping things up and getting into additional cash flows. That's super important for you. I'm really fascinated actually by this new geological team, because that suggests to me that you feel that you've understood and you've come up with solutions for the production side of the equation, but maybe where you see more opportunity going forward is exploration. So can you help me understand your thinking there? Why bring on such a big team at this point when maybe people expect you to be focused on the production side of things?
We're not quite at our mission accomplished moment in the optimization piece. And you and I talked a lot about the optimization piece when we got together 3 months ago at Beaver Creek. But we've made massive progress. The improvements over the course of the last 3 months at our 2 operations is really extraordinary. And as I said to you, every day these mines get a little bit better. The contractor ramps up a little more, the mill gets a little bit fuller, and we get a little bit closer to commissioning at Tahuehueto. So as I said, not quite mission accomplished, but the improvements and the turnaround in the operations is massive. I believe, however, that both of these assets have the potential for extraordinary discovery. And as you'll recall, when we've talked a little bit about this, the exploration potential at Campo Morado has been demonstrated in the past. Some of the drill results that Farallon put together over the course of their massive exploration programs throughout the 2000s and early 2010s, they just weren't followed up on. So we've got masses of data that needs to be sifted through. We've got drill programs that need to be executed. And these kind of VMS deposits, they have potential to just demonstrate new pods and resource growth. And so the mandate and really where the value for this company is going to be created is in demonstrating the size potential of Campo Morado. And then moving to Tahuehueto, no real exploration has been done at Tahuehueto since 2013. So we kicked off exploration about 3 weeks ago. We've completed 3 holes, and they look extraordinary. And look, this mine is on trend with San Dimas, which has produced over 20 million ounces of gold equivalent over the course of the last 30 years. Okay, it's been through Wheaton River, then it was Gold Corp, then it was Primero, now it sits in First Majestic. We're 100 kilometers to the northwest of that mine. And am I saying that it's the next San Dimas? Well, no, but does it have that kind of potential? It absolutely does. And that potential has not been fully exploited. So we believe that both of these assets have potential for massive resource growth. And if we can demonstrate that, the return on investment will be extraordinary. We're going to put $2.5 million into exploration over the course of the next 6 months. And that's going to be an evergreen program because I believe it's going to be successful. And so as this company starts to generate cash flow, a lot of the money that we've generated is going to go back into exploration and demonstrating the potential of these assets to become the kind of assets that the much larger companies we want to have in their portfolio.
Right. So, and obviously, like Paul Gillen and Fernando and the team are only kind of just coming together. They've got a bit of work to do, but they've also got a lot of data with which to work from. For sure. What's the process look like? And what's your expectation in terms of when they come back with a plan, with the modeling, with the targeting, etc.?
Well, so there's a number of things. Really, the exploration team's mandate at this moment is threefold. One is to find near mine, higher grade resource, and that will feed at both assets into the current mine plan, and that'll be incremental cash flow if they can find higher grade material closer to the current operations. That'll feed immediately into the current mine plan. That should boost our cash flow, particularly if we can get meaningfully higher grades. Part 2 will be that mine life extension and mine expansion. Both of these assets have the potential to organically expand. I believe that Tahuehueto could easily be a 50,000 ounce gold producer, and I believe that Campo Morado could do 100,000 ounces gold equivalent. So that, from a company that's going to do around 60,000 ounces this year, growing organically to 150,000 ounces, that's going to come from resource expansion, right? We're going to need to demonstrate that these assets have potential to get much greater. And then lastly, we're going to take some higher risk shots to see if we have some of those real bonanza grades further afield on our on our concessions. And so really that's the threefold mandate. And so part of what they're going to do, particularly at Campo Morado, is go back and get all of that data that was put together in the late 90s and into the 2000s by Farallon. Farallon was a Hunter Dickinson company. They invested a great deal of money in exploration. And then when they sold the company, for a number of different reasons, Nearstar didn't follow through on that exploration potential. And so we have the potential to go and use that data. And look, it's really cheap exploration because it doesn't need more drill holes. It's really a desktop effort. And so that's going to be another part of what that exploration team does, is really a data and analytics, particularly using some of the new technologies that have developed over the course of the last 25 years.
Interesting. And just so I should have asked this at the time with regards to the 2,000 tonne per day. How's that being built out? And is it kind of fairly modular? And if you can feed it, could it be bigger?
So the mill is actually built for 2,400 tons per day.
Okay, got it.
Farallon, when they built it, it is an extraordinary piece of infrastructure there. And it's well built. There's lots of room. It could easily be expanded well beyond 2,400 tons per day at the current footprint. The mine also has grid power. Farallon invested an extraordinary amount of money. I believe that it would cost in excess of $500 million in today's dollars to replicate what is on site there now, including the underground development, the road, the mill, and of course the power to site. So what we have there, particularly given our market cap is 100 million Canadian or 110 million dollars Canadian, is it's irreplaceable, right? So the investment in the mill, I mean, that's all behind us. We're putting from the financing, we're putting $2 to $3 million into some mill upgrades. Again, we're working with Ausenco. That partnership has evolved in quite an extraordinary way, to the point that on Monday they're going to be putting out some marketing material that discusses the great success that they have enjoyed with us, and they're going to be talking about how they can help other clients enjoy the same success in turnaround of mills.
Right. Okay. I want to talk balance sheet with you, because we raised some money. You said, right, we're allocating towards the mill because that will help us with our productivity, output, revenue. We are going to get after exploration with those kind of three goals in terms of ensuring that you're filling that mill. And then you've kind of have one eye on the corner of, obviously, you've got the Trafigura debt component, which I'm not quite sure of the timing of that actually, but you're going to be quite clear. You want to take advantage of this high price metals environment to help kind of with the balance, your own balance sheet, your own bottom line, but paying this debt down on time as well.
So we announced in early November that we restructured the debt in January and August with Trafigura. Under that restructured debt facility, we have to repay them over the course of the next 18 months. So from now until July of 2026, we have to repay them $12.3 million. In October and November, we've already paid them back $800,000. Okay, so that has now gone from a $12.3 million debt to an $11.5 million debt. We intend to pay them back over the course of the next 18 months from operating cash flow. However, as you know, there's a warrant position at 50 cents. It's a fairly large warrant position. It could generate upwards of $20 million Canadian. We would use the proceeds of that warrant exercise to clear ourselves of debt, completely clean up the balance sheet. And so if you think about what this company looks like in 6 to 12 months from today, debt-free, 2 profitable cash flow generating mines, 2 very aggressive exploration programs, I think that company has to have a market cap well in excess of the current.
You think? I guess what people want to see from you though is, you've come in. It's relatively new. You identify what you want to do, and now obviously there's baby steps of doing all of those things. I say, people don't need to buy into it today, but maybe they will if you keep delivering.
Well, so some people will buy in it today. I mean, it's a risk tolerance story, right? Some people will buy in today. Again, I'm in the market after the financial statements were filed yesterday because I see what we're doing, right? I see that we are starting to deliver, and so some people will follow me today. Some people will wait and see, is the turnaround really starting to take hold, and maybe they'll buy sometime in February or March. Others will want to see 2 or 3 or 4 quarters of operating consistency, cash flow generation, clean up the balance sheet, et cetera. So, like any investment, it's a question of risk tolerance. Some people want to get in early, and when it's a little bit more risky. Some people are happy to wait and see and be convinced that this story that I'm telling here today is true and sustainable.
Okay.
Just back to you did ask about the balance sheet. The big reason why we raised the money was to make sure that the last thing you want to do when you're sort of in a startup phase is to run short of money. We raised money at 45 cents. The stock is now at 55 cents. Investors have had an opportunity to make 20+% in a very short period of time. Some of them have chosen to do that. Some of them have taken a warrant and said, you know what, I'll take my money, play the warrant. Fine. I have no problem with that. I think that's what makes a market. But the last thing you want to do when you're in this phase is to run short of money, because then we would have been raising money at 25 cents rather than 45 cents. So out of an abundance of caution, we wanted to make sure that we could execute on all of the initiatives. We got a lot going on at this company, and it obviously we need money to execute on those plans. So we raised money. We've invested at both mines. We've invested in exploration, and I believe that we've turned a corner here now, and this company is going to actually start to generate cash to its balance sheet. And we will, I expect to exit 2024 with a pretty healthy cash balance.
Right. Do you think you've got enough on your plate? Because I kind of want to, I always come back to what am I buying into in terms of the mentality of the management team? There, you've laid out 2 cash generative assets already, exploration upside, cleaning up the balance sheet, but all around you in Mexico, cash stranded assets, wherever you look, it seems. Are you going to stick to your knitting and go organic, or will you be, I don't know, stressing the balance sheet by maybe looking at M&A growth?
We talked about Paul, we talked about Jillian, we talked about Fernando. We are just in the process of bringing on a senior technical operating person. That will be a complete senior executive team. I think a truly extraordinary team for a company of our size. Very qualified finance team, very qualified exploration team, and we are in the process of recruiting a very qualified operations team. That team is going to focus for the next couple of months on making sure that these assets are operating right, efficiently, and profitably. Once we do that, I believe that there will be a major re-rate in our share price. I have committed to shareholders, we will not put more stock out, treasury stock out, below $1, right? Because I think that the dilution, even if it's for an extraordinary opportunity, I think that this stock needs to re-rate. After it re-rates, after this team has come together, after we have optimized these assets, again, I believe that the share price will be substantially higher. At that moment, we may be in a position to start to think about new opportunities. You correctly point out that there is a gulf in valuation between operators and cash flow generating companies and development companies. Today, would we take on a development opportunity? No. Fast forward 12 months, when the world is different, when our balance sheet is cleaned up, when our operations are generating a lot of cash flow, then we have the potential to go out, and we are uniquely positioned in Mexico. We've got a 20-person office in Mexico City. We're in the process of building extraordinary infrastructure, corporate infrastructure that will allow us to, if we so choose, to layer in new assets. And again, we're not going to do that today. We're not going to do that in Q1. But once we are ramped up, then we have the potential, and we'll have a lot of flexibility because of the cash on our balance sheet and because of the cash flow that we're generating to start to look at a lot of different opportunities.